I feel like this market is kind of like one of those baseball players that we don't think about much. They've got a career, they kind of, live for like 15 years. And then we look back and go, oh my gosh, that guy really had a great career. This market just doesn't ever seem to get any respect while we're in it.
No, it really doesn't. And, you guys said, well, it's so unloved. And what I find really interesting also is that if you look at headlines, we're right near all-time highs. Look at all the headlines every single day. They're negative, negative, negative. Why this can't continue, rather than what's going on. And you look at the numbers that come out; they're very, very solid. I'll even look at our own clients this year. Last year our clients took more exposure to the market every single month. This year, for the first 5 months of the year, they actually took less exposure. They didn't start expanding it until June. So I find that also really interesting. Is that this year has caused a little the uncertainty, the volatility hasn't been great. It is higher than last year when we got to this point on the S&P 500. But it's kind of interesting to me that people still are a little bit more cautious than they've been.
I grant you that there's this reserve of skepticism, or at least an unwillingness to feel as if the people are all in. However, if you look at your own index of exposure in January, it was through the roof, right? So you had this brief period in January where people said, everything's working right. We got the tax cut in. Earnings are going to get this second wind. It's going to be huge upside. And the market was so gently kind of rising all last year that it seemed like risk had been wrung out of the market. So I just wonder if we have to get to a point eventually before this bull market ends when you actually do get obvious headline euphoria. It's just not clear to me that it's going to be the case.
I actually agree 100% with you, Michael, because it's interesting. It was like December 31st for us this year. Even though January went up, our clients started lessening their exposure. So I found that part really interesting.
Because they're nervous, or because they've just made so much, why not protect some of those gains?
I think part of it both, because one of the stocks that's always popular among retail is Facebook. Facebook, for the first 6 months of this year, people sold it 5 of the 6 months net, rather than be a buyer, which, again, I think part of it is they're taking gains, and I think part of it is they're like, okay, I've made money here. What can I look for next? And the most surprising thing to me of this rally, when I look at what our clients have been doing, stocks like AT&T have been really popular. Yeah. Anything that's still paying dividends has become a really popular stock because you covered it right at the beginning of the show. Bond rates aren't moving. They've been stuck in this range for so long.
It's easy, Mike, to your point, to find the bear argument. I mean, it is logical. You could say, well, we got this, we had Greece 10 years ago, we've got Turkey now, trade fears, all these things that have happened. But I think maybe the bull case we haven't talked enough about is the reduction in stock. I mean, there were twice the number of publicly traded companies 15 years ago. The number of stock that's available on the market to buy continues to go down because of buybacks. So if you have the same pool of buyers chasing a much smaller pool of stocks, that obviously seems to trump the more bear cases out there.
It does. I mean, look, I think it's part of an overall picture of high liquidity. You have companies that are just like handing cash back. You're not having lots of IPOs. You're not having new equity issuance. That's a bigger deal to me than the reduction in the number of listed stocks, to be honest with you, because most of the ones that aren't listed anymore were kind of penny stocks that used to get thrown around. They don't anymore. But you're right. I mean, you basically have 5 stocks worth more than $3 trillion at the top of this market. And they sometimes seem like the only ones that matter. I'm not saying that's correct. But
they do, because they run a lot of the ETFs effectively. If 5 or 6 stocks are 50% of a popular ETF, for good or bad, they do run the show.
Well, and they tend to get most of the interest, to what Mike's saying also, which can be good or bad. But I think those stocks have actually helped with the interest in other stocks overall, to be honest with you, because, the biggest problem we have as an industry is always, what are we going to do to get millennials interested? Stocks like Apple, Netflix have brought in younger people to be interested in the stock market overall, which is actually a good thing. And the last thing, Michael made an important point before about this really being since 2013. And let's not forget, the bull case, I think, would be, we haven't seen the results of the tax cut yet fully in terms of, and it's funny to me that stocks like Home Depot, et cetera, that are, and Walmart, that are actually investing that money, get hurt by Wall Street. Everyone talks.
We have $1 trillion in corporate money that's still to come stateside,
and everyone talks about both sides of their mouth. Well, we can't have the whole thing last week about should we report quarterly, but the other end of it is if a company actually invests money, they get punished in the short term. So we can't have it both ways. Also.
Most hated bull market ever, but what a run.
But it's also not cheap anymore. I'm going to say it's hated, but you've still had a lot of gains built up.
Absolutely.
And it's showing some defensiveness. So I don't think you can say, well, until everybody's happy and throwing
Fair
a party,
enough.
it's going to last.
Get all that out now, Mike, because on Wednesday we party.